Positive gamma, dark pool liquidity, and a bull market that turns 3. What is Wall Street up to? Well, in today's video, we'll take a look at stocks, commodities, and cryptos together, along with the all-time highs being reached by the S&P 500 as we suspected over the last 24 hours. With semiconductors and NVDA leading the charge, that's good news for the market bulls. But will we see the data align for some of the other opportunities? Today, we'll take a look at that together, along with the big liquidations that just occurred in a cup and handle pattern. Yes, someone lost multi-millions of dollars. Let's take a look together right now. A lot to get into. We'll see you in a moment. Well, welcome back everyone to the Daily Show where we discuss the macro, the data, the lead indicators, and the hottest charts together. If it's your first time here, smash that like button and of course subscribe. Let's begin though with the positive gamma storyline. We know that the market is gearing towards the 6,000 into the year end. Why is this? Well, of course, it all has to do with options flows. And as we'll show you, the key level that we closed at over the last 24 hours has a lot to do with whether we'll still move higher or not. What are some of the good reasons, though, why markets are moving higher? Well, one of them has to do with buybacks. If you've been watching markets for a long time, you would know that many of the big tech companies love to do a good buyback along with the banks. And guess what? They're at it again with monstrous new announcements across the board from Infotech saying we have nothing better to do than to buy back our stock over the next 3, 6, and even 12 months. What about risk on, risk off indicators? Well, as we know, sentiment is starting to get a little FOMO-ish. But even Goldman Sachs indicator here is showing risk on across the board, and everybody is starting to turn into the Goldilocks zone. The latest Bank of America report actually still has us in a neutral into becoming extremely bullish, but we're not quite there yet. And really the biggest reads that we have right now that tell us to be a little cautious would have to be the bull-bear spreads. Heading into the 30% trigger is really something that we don't see that often. And when we get up here, we certainly need to be paying attention. So make sure to subscribe to the channel as we'll be covering this as soon as we get the new data this week, which I think will be interesting. But let's break it down to earnings season. This is what's really going to make or break this particular market. And as we discussed in our Monday live stream, we saw the crypto moves, but we also wanted to discuss the idea that the market is anticipating some interesting returns this earnings season. Did you know that the S&P 500 returns over the first 4 weeks of any reporting season are 80% of the time positive for a median return of 2%? I'd argue that's better than some people's trade records. So it's not too bad to be bullish when it comes to earnings seasons generally. Now, that doesn't mean that everything's cheap, though. What I thought I'd do, and we posted this over on our X if you're interested, is have a look at some of the biggest Mag 7 stocks to see whether they're overpriced, fairly priced, or just ridiculous. And in this case, we have quite a couple of reads. We have, of course, starting off with Meta. Many people calling this an overpriced stocks, but actually it's just on analyst target levels. And if it gets an upgrade, of course, it could go even higher. In general, where's it trading in terms of metrics? Exactly on the average of the last couple of years. So I wouldn't say it's too expensive across the board. NVDA, on the other hand, it's starting to get up there. And of course, as we break to potential new all-time highs, we can see here that it's getting upgraded across the board, currently sitting at an average target of $148 into this earnings season, and probably will get upgrades even further from this point if they do well. Could we see it trade upwards of 50 PE forward? Yeah, it certainly could. And of course, that doesn't make it the most expensive out there. What about Google? Well, Google's being plagued by, of course, government concerns. So this one is technically one of the best in terms of valuations. Average target price is 200 by the street. Current price is obviously 163, leading to almost a 23% upside across the board. But the interesting point is it's actually trading still well underneath its overall average over the last 5 to 10 years. And I think this is important whenever you're looking at the markets. If you're looking at valuations, Google seems cheap, but of course it has those issues. And then it comes to my favorite. Now you'll notice I haven't spoken about it much recently, and there's a good reason why. Number one, yeah, the analyst targets are higher than the current price, but let's be real, it's charged at a very, very high rate, well over its 5-year average, and obviously it's banking on making money out of AI. So from, the metrics itself, at least some of the basic fundamentals, you can clearly see that Microsoft is not the cheapest. If you enjoy these types of segments, let me know into earnings season. I'm more than happy to cover quite a few. But in general, I think with the Mag 7 stocks, most of them are coming in fairly valued, if not even a little bit below where you would generally expect to see them. And in our next video, we'll discuss actually where we were in 2021 versus now, just to actually extrapolate out how much more ridiculous this market could get if we do enter into another one of those kind of hyper bubbles, in particular in some of the stock sectors. Let's discuss, though, earnings season. We know a couple of things are happening. What we suspected in the banks seems to be going well so far. We'll find out on Tuesday whether Citi and, of course, Goldman Sachs are joining along with Charles Schwab. And in general, we expect most of the big banks to be saying, you know what, we're lending pretty well. People have got an appetite for risk. And, of course, we are riding the debt. Now, as long as that's happening, generally the GDP of the economy is going up. And of course, as we're driven by debt in the Western democracies of the world, this is an important factor this earnings season. What most people, though, will be eyeing is Thursday. TSM and Netflix. Of course, the first semiconductor and the first major tech in the US will have everybody worried because this is where we get these huge expected moves. And as we posted over on our X account, links in the description down below, guys, this is the big one because, of course, this year we've seen larger single stock expected volatility than S&P, and it is wildly different. So go over and have a look on our X account to check that particular chart out. It's pretty surprising. In terms of how much TSM is going to move, it's around 6%, and Netflix is expected to move around plus or minus 8% after the earnings. And these are no joke. I mean, Netflix obviously trading at its all-time high, and TSM doing quite well in recent years. Let's talk seasonality though, because could this particular earnings season finally get the Russell set up and ready to go? Well, of course, we've seen these charts before that have shown October, late September into October being negative in election years. So far, we have absolutely no price action to go off in that particular case. But what we do know is that if earnings season does well, and we're already starting to see signs of this, go and have a look at our live stream for Monday where we covered a bunch of the 2021 hyper stocks. We're starting to see signs of pickup in the Russell 2000 stocks. That is companies that don't really necessarily earn a lot of money, but they have growth potential. And currently they are being priced a lot lower than, of course, the major S&P 500, or in particular, the major Mag 7 stocks. Markets are also going to be looking, though, not just at, of course, earnings season. They'll also be looking at CPI and inflation. And in general, we're seeing expectations of inflation picking up into 2025, thanks mostly in part to, of course, the central banks around the world basically printing a bunch of cash and, of course, helping the liquidity feeds of these markets. S&P at all-time highs with the high VIX. We're still sitting in that 20 category. That's not usual, and it does show that people still have concerns. And remember, at any point, we could see kind of like a flash sell. Now, that doesn't mean we'd be terrified of a flash sell, but there is a potential coming into the election that this could occur. And of course, we'll be covering this together. Where I think the biggest thing is here, though, is that 1 month realized volume or volatility versus what actually is implied is hugely different. And of course, this is the same thing we're seeing in the bonds. The bonds market versus the VIX. The VIX is saying we're expecting volatility. The bonds market's saying, calm down, everybody. It's all good. And actually, it's lessening in terms of volatility across the board. That's a very interesting conundrum. It's not something we've seen in a while. But as we know, it's not just about these markets. What about crypto? What about Bitcoin? This is the one that we've been talking about now for about 2 or 3 weeks. And we hadn't really discussed it too much before then because, of course, it could be time for Bitcoin to make a big move. And it looks like it liquidated quite a lot of large traders. Unfortunately, these guys were getting leveraged left, right, and center. And it looks like a big move could be on the horizon. Now, a lot of people say cup and handle. As we know, the range is really reduced over the last couple of months. And whenever we get to these points, we tend to see a large move either on the upside or the downside. And in this case, at least based on the last 24 and 48 hours of trade, it could be to the upside. Take a look here at somebody that got absolutely liquidated. This is a hyperliquid whale to the moon, and they got completely stopped out, losing most of their money in this particular trade, and of course, then having another go at another trade, and it didn't go so well. What did the market do? It short squeezed the rubbish out of this particular sell, and I think there were a lot of people trying to sell Bitcoin on the shooting star candle, which we'll look at when we look at the technical analysis later on. This particular trap seemed like it was pretty clear, And we, of course, have mostly maintained the bullish side. And a lot of that's due to the dark pool liquidity we've been seeing. Coin had dark pool liquidity on it about a month ago, forming a base and the bottom of the market. We also saw, of course, huge moves on MSTR over the last kind of week, and that leading into a massive move in that particular stock. And I want to bring up again more trades on semiconductors because, of course, this is exactly what we've been seeing. Soxal, the 3 times leveraged fund, getting even more trading activity on it before breaking out over the last 24 hours. And it just shows you that someone is probably building an accumulation position. And this is part of the reason why this channel is so great. We go through all of this data together and hopefully you enjoy it. And of course, we bring through the option side, the huge transaction side, the TA, the fundamentals, the macro, everything. And then we try to triangulate where that big flow is going. And remember, on the channel, we also cover so many markets. So as we mentioned in the live stream, usually we don't like MSTR, but sometimes it's worthwhile covering. And as you can see here, 2 large trades coming through, it popped the top, and then the rest is history. It started to go absolutely ballistic. Now, what does this mean in terms of flows throughout the major sectors of the S&P 500? Well, there's been a couple of things that have happened. Semiconductors have had a great 5 days, which we'll look at in a moment. Utilities have gone badly and then, of course, come back up, which has been what our expectation is. Obviously, we still think utilities is in a bit of a holding pattern, even though we're bullish on it over the longer term. And financials have come good, especially into this earnings season. So as we go through the 5 days of rotation, you may notice that this is not exactly what you would see during a bear market. KRE, regional banks, deregulation potentially coming, especially depending on who wins the election. And of course, financials in general doing 3.79% after JP Morgan smashed it. And of course, other banks are just in general doing pretty well. What isn't doing well? Solar. Solar could be one of those ones that you may want to watch as a post-election kind of run. But yeah, it's not doing too well over the last 5 days, down 9.35% as polls shift left, right, and center. Let's move over to the S&P 500, making an all-time high, 5,859 points. This is pretty huge, and of course, it's getting closer and closer to the magical 6,000, 6,020. Are there any signs of bears just yet? Well, even when you go into the small time frames, not really. So when we go over to the US 500, you can see here the futures are still trading near the highs. And these are the new updated options, high levels and low levels for the next 24 hours. And the market is expected to, of course, hold within these ranges in general. What's really driving it, though, is the options. We know that it's all about positive gamma. And if you take a look here, we've got this 5860 positive gamma level with everyone leveraging and, of course, getting hedged off over the last 24 hours. Now moving to 5860 being the call wall. And if this is taken over the next 24 hours, of course, that to potentially push into the 5900s or even 5920 range. Where do we have any kind of support? Well, really, there's no support in the markets if the markets do choose to sell until around 5770. But what you can see here is that it is overwhelmingly bullish in terms of the calls. And as long as the market keeps pressing higher, you wouldn't want to go against positive gamma in such a situation. So you've got to be careful and, of course, learn to go with the flows more so than against them, especially when you have these types of moves. As we know, Tesla didn't have exactly the greatest announcement when it came to the 1010 event. People didn't like it. They sold it off, but it started to stabilize between 210 215 seems to be where most of the puts are. So this is going to act as a put wall. It'd be difficult for Tesla to get below those points, you would have to think. And this helps, I guess, support a base and something we'll look at in the TA in just a few moments. When we go over to NVDA, though, it's all about now 140. 140, 140, 140. 140 will lead into 145, as you can see here. And again, it's in a massive positive gamma situation. And when you look at something like November or even the later on periods of October, you can see here what's at stake. There's a lot of calls, a lot of retail jumping on board this one. And as long as the price action still remains bullish, it can keep pushing higher. And remember this, it's all about these flows. Lots of hedging having to be done if markets can remain in the bid. So let's jump into the charts now and take a look at all of the lead indicators. Right now, basically treasuries is the one that a lot of people are trying to trade. As we often say on this channel, it's not really a trade, it's more of an investment vehicle or multi-month hold. And in this case, treasuries has done exactly what you would expect it to. The market expected way too many cuts. The Federal Reserve said, yeah, we'll do some cuts, but we're not going to do as many as you think. And of course, that took some of the FOMO away. Remember, Treasuries was the most leveraged position by far in terms of the overall bull side. So it's got to wipe a few people out before anything really goes through. Good news for Treasury holders, though, we're starting to move down into what I would call a very interesting level, moving towards the 61.8 to 75 retracement of this overall movement up. That's not a bad sign for Treasuries, and a lot of you guys have been asking about it in the comments down below. So I think the thing is here, it has started to improve. We've kind of gotten to a price that's not bad. But that being said, it's not really a trade. And I think you've got to be really careful about trading things like the VIX or Treasuries and not knowing necessarily what you're exactly doing when it comes to those markets. When it comes to the US dollar, we know that it's currently quite bullish. We've moved into the supply. We were trading this one obviously towards the upside from a technical standpoint, and things have been on the improve. But when it comes to what we move forward from in terms of the dollar index, you can see over here, we've got copper. So dollar index strong, copper potentially weak. Really what this is probably a better gauge for China. So of course we know that when copper broke out early, it was telling us that China was probably about to do something. It did. Copper markets smelt it. At the moment, what are the copper markets saying? Well, they're basically saying we want more stimmy. And of course, it's expected that eventually China is going to be forced into something like a 10 trillion yuan overall stimulus package. So it's going to be absolutely wild when they do eventually bring what the market wants. But at this point, it's degrading off that. And of course, we're waiting for it to at least hit 430 before seeing any movement or flow. What about gold? Some excellent trading on this one last week. No new high for now on gold, so it's kind of around resistance. And there's not really too many updates on gold or silver just yet. Yes, we're seeing potential consolidation, what we call a pit or a pullback in time, but we're not really seeing a strong breakout or flow movement. And that means we just have to be patient. As we say on this channel, patience, react, don't predict. Come from the abundance mindset. If you're holding long, hey, there's not really too many concerns there on those particular metals. But if you're looking for new opportunities, I wouldn't say there's too much flow moving into it just yet either in terms of a large, quick move. What about oil though? Well, as we expect coming into this election season, it's getting difficult because, of course, there's a lot of politically charged style trades happening here in US oil. Now, this is the difference between sometimes positioning correctly and not. We obviously went towards the bull end here for oil. We had, of course, the switch. And as we talked about, if we'd seen a 74.80 kind of 3 being reached on the Monday trade session, this would have been an excellent trade. It wasn't to be happening though. So, of course, oil has now broken back down and coming back into the next interesting range. Unfortunately, this means it's a no-go zone for this particular commodity until we see further structure zones. And that's how day trading goes sometimes. Of course, from an investment standpoint, are you liking the fact that it broke the downward trend line? You would have to say that is a decent sign. So swing traders will be particularly looking at around this price in here at about $70.50 to $70.80 a barrel, or even as low as 68 a barrel and a half. So that could be a very interesting point. Let's move over to single stocks. Tesla first up. Could we be looking at an island reversal off the bad news events in terms of the 1010? You might like it. Market obviously didn't because it had to liquidate quite a few people. In fact, there was someone on Wall Street Bets that I believe took 250K in one day and turned it into 40K. So they did a bit of a nasty job there in terms of what the markets did to them. But now we've gone a gap down. We've held the zone with 2 long leg dojis. If we gap back up, you could be looking at stop losses below here and maybe a bit more momentum to fill the overall range here. And that could be something that's interesting in terms of flows. As we suspect, though, between 215 and 200 is where you get a lot more put support. So we're basically at the point now where you would think the market is trying to find some type of buying pressure. NVDA, on the other hand, went up and it almost tapped a new all-time high here. You can see getting into that 140 range. Not able to break through just yet, but all signs kind of pointing towards the semiconductors looking very, very nice into this earnings season. And of course, off the back of all those dark pool and large trades, we've got a big move here on semiconductors. You can see semiconductors breaking through that 257 range, getting above, and now you would have to think that they're going to go towards the gap fill of 273. Could TSM be the one that brings them there? Well, for now, it just looks like the market that was hated for the last couple of months is starting to heat up. Speaking of something that's been hated for a while, of course, we've had a lot of discussion about antitrust for Google. And this is the classic style head and shoulders type of setup here on Google with a 170 neckline. And we're starting to see some interesting things come out of Google. I believe they just made a deal for mini reactors, that is little mini nuke reactors, over the last 24 hours. And effectively, this is for, of course, their cloud and AI style stuff that they're doing. And this could be an interesting flow momentum trade. We already know it's technically about, 20-something% behind the expectations of Wall Street. And regardless of what's going on with the government stuff, possibly that might be overshadowed by good earnings or maybe just flows. So one to watch. We will be updating, of course, if we see large dark pool liquidity on that particular pair. HSI, the Chinese market, as we suspect, continues to kind of be up, down, and all around. Incredibly difficult read here. All right, we got the early part. We got, of course, the high. And at this point, we're just looking for the next big move. And at this point, it's probably a bit difficult to read from a TA level. So if you're in it for the long hold, well, eventually China will probably announce more stimulus. But at this point, you're waiting for that as the next catalyst. Oz 200, yeah, interesting here. Nice movement up, holds the daily 20 moving average, as you can see. And as we suspect, the Aussie 200 is starting to find its mojo. And it's moving up. It's moving up because, as we know, the Aussie 200 is really pretty much reliant on the metals markets, the finance markets, and also the healthcare market. And we have seen some improvements in the healthcare market in recent days, which you can see here with a little breakout past 154. Now, this is not the Australian market. I know that's the US, but just to demonstrate the healthcare market is improving. And it's often a sector that tends to do better after rate cuts start. So it's been a while for the healthcare market to really find any type of strength. And as we can see here, if we look at it versus the S&P, it's been in the doldrums for a long time, underperforming the SPY for ages. So will it be the beginning of a movement in healthcare? Well, it certainly could be, and we'll be watching it on the channel. US 2K also starting to improve. Excellent weekly closes here with the tweezer rejection wicks, and it looks like it's putting pressure on that 2280 area we've talked about a lot on the channel. If we get that, could we be going to 2438? Well, of course, this would be what Tom Lee's looking for, but in general, this would be a pretty strong momentum move. So, of course, the Russell 2K may have an excellent end of the year if we are to believe the data and the seasonality. US 100 hits the first big resistance of 20,425 plus, and this is, of course, around that area of supply over on this left-hand side. Could it go higher? Absolutely, could go all the way to 20,600. But as we know, we've hit a couple of things. We've got a call wall, which is at 58.60 right now on the markets. We've got a little bit of resistance for the US 100. And of course, the Russell 2K kind of is in the resistance zone as well. So it's not as easy as the Monday in terms of knowing that we're at res. But if the markets keep trying to push and we see the call wall in particular taken out from the S&P, then you've got to just think that it's going to be another green day. For now, at resistance across those boards. Now, what could be most interesting? Well, it's probably the crypto market. Massive liquidations over the trades that went through here and here. Unfortunately, those people lost big time. We haven't actually seen the market make a new high, because you can see here it made basically an equal high. But this is all very positive signs. Pullback, especially if it gets back into this area in here, let's say around 63K, that could be seen as a fairly bullish overall sign. A lot of replication here in the Bitcoin markets, and it'll be interesting to see whether Wall Street let it go for once. 68.5 being the big kind of break zone for us to change out of this downward channel, and obviously to begin what many people call the cup and handle. And yes, I know technically from a cup and handle, if you look at it from the TA side of things, it's too long, it's been too long, and it doesn't actually meet the expectations. I don't really think of a cup and handle as the pattern that you should be watching. Instead, what you're thinking about is, as we mentioned, a slow period or a pullback in time burns time. So will it play catch up to the other risk on assets right now? That's really the question. And what we do know is that when Bitcoin sits for a long time, it tends to explode out in one direction. And I think that's the most key thing here when it comes to the Bitcoin trade. It's not so much the cup and handle that everyone's going to be talking about. It's more the liquidations of large traders trying to go bearish, which means that people are negative on the pair itself. And in general, the price action improving and the structure is improving across the board. When we look at Ethereum, it's kind of floating up, down, and all around as well. A lot of channeling going on. Have we seen a bull zone break? No, but a lot of the side coins and alts were starting to improve. It just shows you the money is flowing into all the different markets. We've seen it go from the stock market and NVDA into, of course, gold, into, of course, silver, into copper, into metals, into China, out of China, into American dollar, and then, of course, oil, and now we're moving over to crypto. This is the beautiful thing about markets and what we love to cover here. We show you where the flows are going. And over the last week, things have certainly started to improve for this particular currency asset. Now let's move over to what news is coming. Well, of course, it's really about the banks this week and the big tech kickoff. And we can see here we've got a couple of other central banks information. And then as we go into the late end of the week, we get the core retail sales. They're expected to be relatively good. You can see here that it's expected to be 0.3% on retail sales, core sitting at 0.1. And then we've got the ECB press conference at 8:45 New York time. And then, of course, more central bank information around the world. Couple of FOMC speakers. I would say this is earnings kickoff. And we, of course, will be following all of the big moves. As we often say during earnings season, it's often best to have patience and react after the earnings to get opportunities. I love earnings season because it comes 4 times a year and it gives you great trades. So if you're interested in finding out more, then of course, check out either one of our courses, follow along on the channel and subscribe. And of course, if you're in Sydney, come to our trading event on the 30th of October. It's actually completely free to attend this one, and it's going to be an awesome session. Thanks so much, guys. You have a fantastic day, and we'll see you in the next one. Bye for now.